Now, this week, one of the biggest banks in the US, Wells Fargo, struck a $395 million deal to buy an office block in the City of London. But today, we've heard some alarm bells for the commercial property sector. The Royal Institution of Chartered Surveyors says that it found demand for commercial property slumped after Brexit. So just what's going on? Well, joining me here in the studio is Geoffrey Matsu. He's a senior economist at the Royal Institute of Chartered Surveyors, or RICS. Really good to see you. So talk me through what is going on in this sector post-Brexit.
So basically, we've seen an environment of uncertainty, and so businesses have responded both on the occupier demand side and on the investment side. And we found that occupier demand has flatlined, and that's the first time it hasn't risen since 2012. And investable stock, though, is actually still tight. And so it's important to keep in mind that the demand-supply dynamics and the fact that supply still is a bit constrained.
Well, that's interesting, isn't it? That supply is still in demand here in London. We still don't have enough, particularly when it comes to industrial sites, things like manufacturing plants.
Yes, and a couple of explanations for that could be that one, sterling has come down about 10% since the vote, and that benefits manufacturers in terms of the export flows. Also, before the Brexit vote, we found that industrial space was already more constrained than retail and office, and so that would explain sort of the differential between the sectors.
Because of that drop in the pound that you mentioned, are you seeing also a slight rise in opportunistic investment, people with dollar investments?
Yes, we are. We are finding that it's more of an opportunistic behavior. So it's not wholesale people are coming in saying that with dollar-based investments that they're ready to buy, but they are finding that with essentially a 10% discount that things may look more attractive, especially in a buyer's market.
This survey was conducted immediately post-Brexit. The data was collected between the 24th of June and the 12th of July. How do we know if this is a knee-jerk reaction or a sign of things to come in the commercial sector?
We assume we temper the results we've seen in this survey with what questions we've asked in the Q1 survey, which was basically a lot of our members have told us that heading into the Brexit vote, they weren't so sure that just over a third of our respondents said that they felt the impact of leaving the EU would be neutral. And so if you then overlay that onto the actual results of what people are saying now that the referendum has sort of led to an exit for the UK, we sort of have to ask, is this a bit of sort of animal spirits, and that will sort of then dissipate once there's more clarity, both in terms of the economy, politically, and also socially in terms of the movement of people.
Well, that's interesting. So if another survey is conducted in, say, Q3 or even ahead of that, we might see that the dust has settled a little bit, so to speak. And also, this survey produced a fairly nuanced result when we talk about geography. Is that right as well?
Yes, that's true. London, for obvious reasons, being the financial center and where a lot of high-value projects are being based, was more so affected than other regions, and that's to be expected. And we're also finding the landscape being quite different, as I said, amongst the different sectors of office, retail, and industrial.
Okay, really good to talk to you, Jeff. Many thanks, Jeff
Thank you very
Matsu
much.
there from RICS, senior economist there.